So I think there's a few things going on in the markets. We need to address it. Look at our positions. I'll show you that. But first, before we jump into the charts and show you what I'm going to do in the trades, I got to make two important adjustments. Number one and number two. Let's dive in. So why do we think the market might be rolling over? Well, let's take a look at the positions we're currently in. I'll probably cut myself out of the screen, but you can see here that we're long Amazon, we're long GDX, which is gold miners, we're long GLD, we have Lululemon, that was an earnings trade, we're long the S&P, TLT, which is your bond trade, and XOP, which is an oil trade. The one that I want to point out is, look, hopefully I'm doing my best weatherman impression. Amazon is down on the session. And I'm seeing a consistent theme here with Amazon and other tech stocks that are causing concern. This market in here is being driven by commodities like energy and metals and miners of the commodities, etc. So let me show you. So I track these major ETFs. And what I like to do is just do a percent change sort very quickly to give you a good temperature of what's going on in the market. The NUGT, the gold miner, leveraged up 12%. Behind that, you got the junior miners, then gold miners up 4 and change, metals and mining up 4.13. Then we get healthcare, transports, construction, materials, transports, healthcare, energy, materials, oil and gas. So you see a theme that's driving this market, right? So let's go up and sort by worst performing percent change on the session. Worst is real estate, okay? And then biotech, semiconductors, biotech, insurance, and then this little iShares, that's interesting. This oil and gas is down in the session. Then capital markets, right? So you've got some pretty important ETFs that are down in the session. Let's go over to the sector spiders. This is another one that's a little bit more broad. I like to watch this one to get a good feel for the market. And here's my concern right here, guys. Check this out. XLY is your consumer discretionary sector SPDR, sector spider. That includes some big names like Amazon and Priceline and Home Depot and Lowe's and some big names. Behind that, XLK technology is basically the QQQ. So those guys are negative on the session. And then all of a sudden we have the XLE going negative. So, I'm long a lot of positions, and it looks like, I've given back about half my profits on the session as I'm getting ready to record this video for you. So there you go. So it's time to make a move, and let me just show you the broader S&P chart, and let me show you why. First, crude oil is reversing pretty sharply here. That's number one, and that's, if we lose the crude oil market, that's a problem. Dollar is also moving into support. Before I go into the dollar, and this is just a rambling video, but it's kind of the market we're in. Let me show you the dollar. A lot of these commodity moves, the energy move higher, the metals, gold, silver, a lot of it is precipitated on a falling dollar. Check where we are here in the dollar. If we do a retracement from the blue dot low, the major swing low to the major swing high, we are right at the 618 retracement. And you can see as we get down from a 4 hour, let's get down to 1 hour, we dip below and now we're starting to come back above. So we are holding support here in that dollar. That's going to be key, and that's going to help to put a top up in GLD, in crude oil, and so on and so forth. The broader market that I want to show you here is the S&P. So here's one of my main concerns. So this is the SPX, this is the S&P cash up on the 1 hour chart. And you can see I've got a good 5-wave Elliott trend labeled here. 1, 2, big old rally in 3, sideways Chapo correction in 4, and then we're just rallying up in wave 5. So you've got to attach some fib levels to it to figure out where that wave 5 move could complete. So I go to my fib extension tool, and here's 2 studies you do. Number 1, you do distances of 1 up from 2, from the end of 2. Okay, so that leaves the 200 and 261% projection is what it's called. Then what you're going to do is distance of 1 through 3 up from 4. Okay, so we're kind of in this limbo zone. We had a first zone of resistance between right around 2112, and we've got another cluster up around 2130. There's another study I'm going to do, and I'm going to do an external retracement, which is called an extension of wave 4 itself. And let's see if we can kind of substantiate that zone at all. Okay, So now as I've zoomed in and I've kind of consolidated the fib, you're going to see that there's a 1, 2, 3, 4. There's 4 fib resistance levels between 2109 and 2115. We've tried twice, yesterday around noon and then today on the open to get through this. So far we're starting to reverse, and this could be a potential wave 5. If we move out of the zone at 2109, this 5-wave move could be completed off the lows. And as I said, that crude oil market starts to back off, if gold starts to back off and the dollar finds a low, the whole premise for this rally that we've seen in here is gone. And we have the technology and the consumer discretionary, as I mentioned, already gone negative. So I might need to sit down at that trade desk and make some position updates. All right, guys, good luck. You're still here? I guess you liked the video. If you did, go ahead and click the thumbs up button or subscribe to this channel directly below, and you'll get the videos in real time. Or you're gonna have 7 years of bad luck trading and you have to babysit Jake and Brody.